Forex traders, welcome out to your FOMC preview video. This is getting prepared for tomorrow's Fed meeting. We're going to talk about the US dollar, talk about how to trade it. Let's jump right in.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we look at today in equities, it was a bounce back day. You can see that the S&P didn't recover all of yesterday's losses, but certainly bounced back and recovered some of them after what was an ugly gap down. Now, is this the old dead cat bounce, just a bounce and then we proceed to sell off? I think it's one of two things most likely. Either we go range bound here and we take the sideways trade, which is maybe the most probable, or we sell off from here and make lower highs, lower lows, which is the second most probable. And then I would say the least likely, in my opinion, is that we break to the upside. I think that's the least probable of the three. But having said that, you can't discount that as a very real possibility, especially with the size and the power of today's bounce back. So put things into perspective. We're still down on the week. It's still kind of ugly, but a better than expected, certainly a stronger bounce back than normally would happen following that type of decline. So give credit where credit is due. We're going to look at the Fed meeting and what's to come. Well, they're not expected to do anything, and I think that's pretty secure. They're not going to cut rates. They're certainly not going to raise rates. The markets anticipate that the next move will be rate cuts, and President Trump has been out and saying that he's going to push the Fed to further cut rates. So the expectation from markets is that there will be rate cuts coming this year. How many of them? Well, if you look down here to Friday, core PCE, it's really a question of growth and a question of inflation. If inflation is subdued and down near that 2% range, they're going to have no problem cutting rates, especially if the economy weakens. However, the economy is still very, very strong. So do they want to really push the gas and cut rates and really get things? And the worry is that they overheat, that inflation gets out of control a second time. And that just was not good. I mean, you can't have 10% inflationary years. It hurts the low-end consumer that's a little stretched on their money and their ability to buy things, and it just puts stress on them, which is not something that this economy wants or needs, or society as a whole. So it makes it more difficult. I think we hold here. Does the Fed give any indication that more rate cuts are coming? Well, that's their guidance. They expect to. You've also got the ECB this year, or this week. They're expected to cut rates by 25 basis points. And then, of course, you have the Bank of Canada tomorrow morning that's also supposed to cut rates. So as far as trading, tomorrow's going to be robust. I mean, the next 24 hours, you've got a Bank of Canada, you've got a U.S., and you've got the ECB early Thursday morning. So it is packed with possibilities. Let's look at some charts together here, break down the velocity of these things, and make sense of it. First, the bad news. CAD is in more of a holding pattern. US dollars in more of a holding pattern. The euro's in more of a holding pattern right now from a velocity standpoint. So we don't have strong patterns and momentum in these currencies with central bank meetings. But there's still the possibility that we can trade some things. And here's where we're at. The US dollar, it's trying to reverse what's been a little short-term downtrend. Notice the series of lower highs and lower lows. That's what a downtrend is, right? It's stair-stepping its way lower. Notice the recent reversal carried us to a higher high than the prior peak. and I would anticipate this low to create a higher low than the prior low. So perhaps a stair-stepping approach to the upside. What's the problem? The problem is flat moving average, flat RSI right around 50. You can't really say that there's a ton of velocity here, but if the US dollar can turn up sharply, you'll be on a buy signal. This moving average will start to curve up and the RSI will start to move up. Then you'd be in business. So hopefully tonight into tomorrow, you start to see that move to the upside and the US dollar can be bought. Well, what do we trade against it? Aussie looks fairly weak. Again, not massively weak, but certainly looks like maybe we'll go back down towards those lows. The problem is it's still in this range. There's still support and resistance up above and below, but you've got more downward pressure than upward. You're below 50, which denotes weakness in the currency. So I don't mind, that pairing where you're basically buying USD and shorting Aussie as a pairing. I think that could make sense. If you wanted to trade something to the upside, not US dollar related, I think it would be the pound. Now, I personally like USD to the upside. So, do I want to buy the pound and short the US dollar? Maybe on the Fed meeting if that's where the trend and momentum are going, but I would be more inclined to look at saying, well, maybe I trade the CAD event tomorrow. And obviously, the pairing would be the British pound. So we could play the pound to the upside and play the CAD to the downside. That has a very real possibility. So if you want to buy the British pound, which is the strongest currency in the Forex market right here, right now, I would prefer that you buy it versus the CAD. That's my take. That's where the momentum is. I'm not as big a fan of looking at the short US dollar, at least not based on the charts right here, right now. So hopefully that gives you some ideas as we move into the Fed meeting tomorrow. Have a great one. We'll see you next time.